Hello everybody, welcome to Monday Market Must Knows. My name is Merlin Rothfeld, and normally I give you 3 things for the upcoming week. Well, this week I'm giving you 2 things, but one of those things has 3 or 4 of them in it, so you have a whole bunch of stuff to think about this week. Let's start off with the most important piece, which is earnings season. As we found out last week, a lot of the financials reporting earnings, and even though some of the numbers were good, most beat earnings, the stocks took a pummeling because there was a little bit of skepticism about the future. So let's take a look at what we have cooking for this week. Monday starts us off with International Business Machines. You have IBM, Halliburton, Logitech, and CDNS. Tuesday brings us our first major volatile crazy stock. That's going to be Netflix. That's after hours. The ones highlighted in green are the really volatile ones, which Tuesday also gives you Lockheed Martin, Procter & Gamble, Texas Instruments, Philip Morris, and Charles Schwab. The big daddy that everybody's excited about, Tesla, reporting on Wednesday. Also Verizon, Lam Research, Align Technologies, Xilinx, and Biogen. Now Thursday, I don't know which one's most significant here. I think it might be Amazon on Thursday. You also have AT&T, Intel, Coca-Cola, Northrop Grumman, and Freeport-McMoRan. And then on Friday, you have American Express and Southern Copper Companies. Now, all of those announcements are going to be coming out. Some are pre-market, some are aftermarket. You can check earnings calendar information there. But there are 417 in total reporting this week. So I'm just cherry-picking some of the big names. Make sure you check your earnings calendar because there's a lot of stuff coming out. Now, our second piece of information, which will have 4 components in it, is one that we haven't talked about yet. It's really critical to our environment and our economy because housing data drives the market. When we look at GDP, gross domestic product, between 15 and 18% of GDP is made up of housing data. As you may recall from the past couple of weeks, we've been looking at GDP numbers and showing a 32% decline in GDP. Well, housing data has been on the rise, which is actually bringing that up, which means the other data we're seeing regarding GDP is much, much worse. So let's see what's happening with housing data because we have different things that drive the economy. We have things like Home Depot and Lowe's and consumers going and building on their homes. For things that need building permits for that. You also have homes coming to market. So you have existing home sales, you have pending home sales, and all of this can drive these markets higher or lower depending on the velocity of money pouring into those markets or out. So let's take a look at the first one, which is the National Association of Home Builders Housing Market Index. Yes, that's a mouthful. What this is a survey of about 900 different home builders asking them what they feel about the markets going forward. How optimistic are they? What I want you to do is look over on the left-hand side. You can see back there in 2004 and 5, we have well eclipsed that. And even though we fell aggressively in February and March of this year, we have rebounded extremely aggressively, meaning the optimism here for home builders is off the charts, some of the highest levels we've ever seen. Now, of course, sometimes when optimism gets ahead of itself, things start to get long in the tooth and come down, but this is a very positive piece for the housing market. That information comes out Monday at 10 a.m. Eastern Time. Second piece of information, it's actually 2 in 1. Building permits and housing starts. Of course, as a homeowner, I am going to do what I can during this time where I'm in quarantine and maybe do some improvements to my home. And I'm going to have to go pull some building permits for that. And you also have the housing starts, which are new construction. I also put in a horizontal red line so you can see how we were relative to times back in 2005, 6, and 7. We're nowhere near those peaks, but we still are showing a really nice uptrend from those lows back in 2009. And of course, yes, we did have that dip in early 2020, but we've rebounded pretty quickly, and this is looking like another positive piece for our markets going forward with building permits. Finally, we have existing home sales. Now, existing home sales are critical because obviously when money is as cheap as it is right now, we have 30-year fixed mortgages under 3%, people are going out there and buying homes because they're locking in and taking advantage of that cheap money that the Fed has afforded us. Existing home sales have bounced aggressively as well. You can see those past 3 months have been a huge jump up. Now, we're still not back to the peaks from 2005, but this is a very positive sign for our markets and existing home sales. Expectations are right now that we're going to continue to see spikes up in existing home sales. Now, that announcement comes out Thursday at 10 a.m. Eastern Standard Time. Now, while you may not think that this is as significant as some economic data like GDP or retail sales or even a Fed announcement, you have to understand and circle back to this is 15% of GDP. And the last reading we got on GDP was negative 32%. That means we have this one market industry, housing, which is really doing well and showing positive increases. That's pulling GDP up. So that 32% decline, what is that going into? What other factors are bringing that market down? And if there is any sort of faltering in the housing market data, which we're going to see come out 3 separate days this week, that could all of a sudden really start to impact GDP. That's why we put it on your Monday Market Must Knows. We'll see you next week.